my friends, Ramani Ranjan Khuntia on behalf of Mars Institute of Commerce. Today we are going to discuss about the global minimum tax, MAT India minimum alternate tax and alternate minimum tax. When it is globalization of business, at that time it is very important and crucial to make the taxation system at global levels, to bring the taxation rates equal in global system. It is because many business house now shifting their profit operations to the country where the income tax or corporate tax is lower from their residence countries. It is because the pressure is now arising to whole world or whole universe to make a universal tax systems, so that tax should not be avoided. So it is because international body, initially all developed country who is coming under OECD, they have for the global minimum tax, and it is started in 2011. Now the number of member is gradually increasing, and now total 130 countries express their supports for a global equal taxation system, so that any company, any business house cannot avoid the tax, because tax, the objective of the tax for the implementations of social empowerments, infrastructural developments, health improvements. So tax money should come and it should be in equal form. Now we will discuss about the MAT, minimum alternate tax. Minimum alternate tax is introduced in India in 1987 at the time of Mr. Rajiv Gandhi, when the economic reform has been started. The basic objective of bringing minimum alternative tax to generate revenue for the budget. Budget is the forecast numbers, and it is based on the collection of the tax. But most of the time it has been observed corporates and business houses and business owners normally evade the tax, take the benefit of the deductions, rebates, and they are calculating their tax without any liability. So in that scenario, government has taken a step to introduce minimum tax, minimum alternate tax. At this moment, the minimum alternative tax is 15%. And the same way, minimum alternative tax is for the corporate, and alternate minimum tax is other than corporates, like partnerships, proprietorship firm, individual, Hindu undivided family. The same objective. Those people are not coming under taxations, but by reverse calculations. By reverse calculation, then alternative minimum tax is being calculated, but the same tax can be adjusted in the next 15 years. It means the revenue will not be derails, but the tax amount should not be beyond. It means the tax amount is to be collected, to be adjusted in future times. So by this, bringing this minimum alternative tax, alternate minimum tax, minimum alternative tax has been started in 1987 and alternative minimum tax has been started in 2011. The basic objective is to increase the revenue. So this is simply a awareness among the business houses to pay the tax. In spite of, sometimes it has been observed, many company, many corporates, even though they are distributing dividends, profits to the shareholder through the stakeholders, but not paying the taxes. So it is because this new tools, new technique has been adopted, and the minimum alternative tax is invented by the US in 1967. It come to effects, followed by the US, France, Italy, Canada, basically follow the minimum alternative tax. So India is one of them. Actually at this moment 6 countries actually following the minimum alternative tax calculations by techniques. Same way alternative minimum tax is the same like minimum alternative tax. For the minimum alternative tax there is no threshold limits. From the zero figure we have to calculate the minimum alternative tax. If it is a higher side, so definitely the corporate has to pay the tax amounts. In the same situation, alternative minimum tax, there is some threshold limits. After doing all adjustment, if the limit is cross 20 lakhs, the threshold limits, then alternative minimum tax has to pay, and the rate of tax is 18.5% in India. Of course, it is changed in every years. So this is not the question of rate, this is the question of the process, the adaptabilities. So under section 115, under section Income Tax Act 115, this is introduced. So next we will discuss about the global minimum tax. So what is the objective of the global minimum tax? Global minimum tax is the purpose. Many Western countries, developed countries, their business houses, the owner of the developed country, they shifted their business operation, their profit center to developing country where the tax rate is lesser from their own countries. It is because they have introduced this taxation system in 2011 to bring a robust system up, to bring the peoples in the same taxation process. It is also same as the 15%. So initially 38 developed nations join hand to bring the equal taxation system to the part of the global minimum tax structures. Subsequently, at these times, around 130 nations agreed to take part in this process in this policy formulations. Of course, there is no such world body who will monitor this, but to formulate a policy, it is basically the Organization for Economic Cooperation and Development. that is OECD, is doing this policy. At this time, majorly all the European Union, some US nations, part of this global minimum tax. Besides that, many developing countries join hand. In India, they have also started formulating the law how to they will collect tax in this platform. So as per accounting standard 12, they have started changing some rule and regulation so that this law can be implemented for those business house those are having business in the overseas. And at this moment, the threshold limit for global minimum tax is $750 million. If the annual turnover is crossed $750 million, so in that scenario, the business house, the business owner will come under that categories. So why this minimum tax has been introduced? What is the basic objectives? So when the budget is formulated, it is based on the forecast, it is based on the projections. But many times, because many developing nations in their tax structures, they have introduced deduction and rebates, and some relaxation definitely they have given in different sections. So taking the benefit of the privilege of those sections, many business houses try to calculate in that way, so tax has not to be paid. So in that situations, the deficit of the budget is increased, and in that scenario, the borrowing part will be increased. So in that situations, the finance burden will come to the governments. So to make it equilibrium, to make it streamlines, government actually appeal to the business houses to make this calculation, that is minimum alternative tax. This is not an additional burden, but of course you have to pay this tax amount today, and you can take the adjustment in the coming 15 years. That is the whole objectives behind this minimum alternative minimum tax, of course. But for the global minimum tax, it is not like that, because besides 6 nations, all other nations doesn't have any minimum alternative tax formulas. So for the global minimum tax, this much of a tax they have to pay either in their home country, otherwise where they have generating profits. So this is the all about the global taxation system, how modifying as per the requirement. When the globalization is there, in economic globalization is there, so in that situations, the globalization of taxation is also a part of the part of a taxation systems. Thank you very much. This time.